Ladies and gentlemen, welcome back to the channel. Another very exciting day for AMC in the bag. And I say exciting because there's extreme levels of volatility. Now, we're going to talk about everything that happened here on the day. We're going to talk about upcoming earnings tomorrow morning. And tomorrow, we're going to talk about Fed Jerome Powell. We're going to get into the Ortex data, so on and so forth. Typical things that we like to cover. But we're also going to get into this article that says AMC stock is on fire. Could 2023 be the year of the apes? And he kind of tries to break down why AMC has been rallying. And surprisingly, he says it could be due to naked short selling. So, very interesting. Let's get into all of this information and much more. Hit that like button and subscribe to the channel. If you are especially new here, thank you for joining. Consider sticking around a while. Now, let's get straight into it, guys. First things first, with broad market data and information that happened today. As you do know, Fed Jerome Powell gave us a speech that was very mixed, I would say. For a majority of it, it was pretty bullish. And then Fed Jerome Powell says, quote, if we continue to get, for an example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise rates more than is priced in. So not only did he say if inflation goes higher, which that's an obvious one, but he says if economic data reports continue to be stronger than expected, they're going to have to raise rates more than what we currently expect. Now, why is that a problem? Well, it seems like all the economic data reports that we've been getting as of recently have been very good. This does support that the Fed will need to raise rates higher. This is something the markets have not expected. We did seem to brush it off. By the end of the day, the markets rallied into the close, but it will be vitally important to pay attention to all major data points that will be coming out over the next couple of weeks, specifically because of these words from Fed Jerome Powell. So it's going to make the markets much more volatile than we had previously thought or expected. And that's a backdrop to everything going on with AMC, because if the markets move a lot up or down, it will also affect AMC stock. And as you guys can see from this article, if we actually go down here and pull up this chart, this is 25-day returns out of the past 5 years. So looking at the past 5 years, these last 25 days have been remarkably bullish for AMC. And it tends to be that way if stocks have good beginnings of the year. They tend to have strong ends of the year as well. That's just a historical fact. If a stock or the general stock market starts off good for a year and is exceptionally or historically well, you tend to have a decent year overall. That's a big reason why market participants have been so bullish on the markets in 2023, is we've been off to the races. This article continues on to say the stock's performance in early 2023 is in the same league as some of the most vicious rallies of the past 5 years. While, quote, meme mania may have taken a break during a historically bearish 2022, retail investors seem to be reclaiming the spotlight in the new year. Now, it says AMC shares are up a whopping 62% year to date, and this is historically significant, and it goes into this chart that we just showed. Now, it says, why is AMC on fire? It says, it is hard to tell exactly why AMC stock has been catching the updrift lately. If there is even one single reason, company fundamentals are the least likely explanation. Since AMC Entertainment has yet to report Q4 results, earnings will likely come out in the next few days. As we have previously reported, conversations about the efficacy or not of certain short-selling practices have resurfaced in the past weeks. Genius Group CEO Roger Hamilton has all but declared war against naked shorting after appointing a former FBI director to investigate alleged illegal trades in Genius shares. Bringing naked short selling back to the forefront has probably contributed to retail investors having come together more decisively to spark bullishness. It probably helps that AMC's short interest remains highly elevated at 23% according to Y charts. This is the highest that short interest has been in the past year. The previous 52-week peak had been in mid-June 2022 at just under 22%. This article continues on to say that throughout 2023, if apes remain this bullish as we currently are, it could continue to fuel a lot of bullish optimism within AMC stock and could help to squeeze out the short sellers. Now, today does not sound like that is going to happen if you look at the price of AMC down about 10%, and that is because Bed Bath & Beyond is literally throwing a Hail Mary, and they're trying to sell enough stock to equal $1 billion. That is 3 times the actual valuation of Bed Bath & Beyond right now as far as their market cap is concerned. That is dropping Bed Bath & Beyond about 50% here on the day and causing a knee-jerk reaction throughout all quote-unquote meme stocks alike. So I think this is really a short-term blip in a long-term uptrend, or at least a mid-term uptrend over the next coming weeks and next coming months. Once we get down to earnings, I think that'll be more confirmation of the bullish case for AMC. Fundamentally speaking, I think you're going to get some very positive things that could also help drive out shorts from their short positions. If we take a look at AMC, you do see AMC is still on the threshold securities list. Short interest sitting at 22.51%. The amount of shares currently sold short sits at 116 million shares. 206% cost to borrow rates from Interactive Brokers. Cost to borrow max 380% as per Ortex. If we take a look at the shares that will actually have to be bought back over the next coming days by the hedge funds and the market makers, tomorrow 861,000 shares that will have to be bought back. The day after that, about 600,000 shares. That'll be Thursday. And on Friday, about 2.2 million shares that will have to be bought by market makers and hedge funds as per the T+35 settlement time. So over the rest of this week, it looks like you could have a backdrop of buying pressure from these FTDs, and next week is going to be the same story with about 1.4 million FTDs that have to be covered on Monday, Tuesday, and Wednesday. So potentially setting up for a very bullish next couple of days. Now, as far as the technicals are concerned, you did break above the 100-day moving average yesterday. You broke above this downtrending level of resistance, and today you kind of gave it all back. Now, you're still right at that 100-day moving average. You did close under it slightly, but you're very close to it in the sense of tomorrow you could easily bounce above this. Same thing with this downtrending resistance level. Any upside from here and you're going to break out above these levels, and that's going to be very bullish for AMC. And I think today would have been a very positive day again for AMC if it wasn't for the knee-jerk reaction within Bed Bath & Beyond shares. So on a technical basis, you're still setting higher lows, which is a very bullish thing, unless we break down to the 50-day moving average and even break under that, which would be at about $5.54 per share. I think the story with AMC remains to be very bullish. You're going to have to see the technicals break down in a big way, or the fundamentals to deteriorate in a big way, to really see the momentum get killed with AMC, especially as they just announced yesterday their flexible pricing programs that will be going into effect to charge more for better seats at their theaters. That fundamentally is a very positive development, and this is literally what I've been struggling with for like hours now to try to make this video. So I do apologize, it's coming out way after when it should have been out. But yeah, that's just how it goes. Now, as far as the rest of this week, you are going to get the Michigan Inflation Expectation Survey on Friday, and that's going to be critically important for the markets, as Fed Jerome Powell just laid out. Good economic data is not so good for the Fed pausing or for the Fed cutting rates. They need to see economic data come in line with a labor market that will get us to 2% inflation over time. He does say that we're not even close to that when you're producing 500,000 additional job gains in the month of January. So Jerome Powell said good economic data should be bad news for the stock market, and they might have to raise rates higher than expectations. If the markets blow that off, that is good, but odds are the markets are going to take a while to actually digest this information, and it's going to make data points a lot more volatile than I think they otherwise would have been. So Friday, you got a big data point. You don't have much throughout the rest of this week besides for earnings. Tomorrow, pre-market, Uber, CVS, Wendy's, Dominion Energy, Yum, Under Armour, and tomorrow after hours, Walt Disney, Affirm, Robinhood, Digital Turbine, MGM Resorts, O'Reilly's, Goodyear. A lot of second-tier companies the markets aren't going to care about nearly as much, guys. So that is really going to be all for this video. We did cover a lot. There's not too much else to actually say. Nothing company specific happened with AMC, and long story short, I think this is a short-term blip due to Bed Bath & Beyond and the knee-jerk reaction. And even as futures indicate, we might have a positive day tomorrow. AMC is up 0.5%, guys. So that is all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. I do apologize for my daughter. There's literally nothing I can do right now. But that is it. Thank you for watching. I will see you in the next one.